This video breaks down the best stocks to buy in February 2026 based on AI-generated forecasts and long-term investing principles. If you're watching this, understand right away, this is not about day trading or short-term price swings. Everything in this video is focused on long-term investing, meaning a 1-year minimum time horizon and ideally a 3-year outlook or longer. The price targets you'll hear today are not guesses or hype. They are generated using AI-driven forecasting models that analyze historical price data, earnings growth, valuation multiples, revenue trends, sector momentum, and macroeconomic inputs. These models don't predict the future perfectly, but they do provide probability-based projections grounded in data, not emotion. If you're interested in long-term wealth building using a data-driven approach, hit the like button, subscribe to the channel, and let's get into it. Before we start, a quick but important disclaimer. This video is strictly for long-term investors. The 1-year and 3-year price targets mentioned are AI model projections, not guarantees. Markets are unpredictable, no model is perfect, and you should always do your own research and invest based on your own risk tolerance and financial situation. As we move into February 2026, the market environment is being shaped by artificial intelligence adoption, higher for longer interest rates, sector rotation, and increased focus on valuation discipline. In environments like this, AI models are especially useful because they remove emotion and focus on long-term trends and probabilities. That's exactly how the following stocks were selected. The first stock is Alphabet, ticker symbol Google. Alphabet remains one of the strongest long-term businesses in the world. Its core businesses include Google Search, YouTube, Google Cloud, and a rapidly expanding suite of AI-driven products. AI forecasting models favor Alphabet due to its massive free cash flow, dominant market position, and multiple independent growth engines. This is a long-term compounder, not a short-term trade. The AI predicted price targets for Alphabet are 1-year target, $400, 3-year target, $580. The second stock is CrowdStrike, ticker symbol CRWD. Cybersecurity is no longer optional. As more data and infrastructure move to the cloud, security spending becomes non-negotiable. AI models highlight CrowdStrike because of its subscription-based recurring revenue, strong customer retention, and expanding platform ecosystem. Short-term volatility is expected with a stock like this, but the long-term growth thesis remains intact. The AI predicted price targets for CrowdStrike are 1-year target, $5, 3-year target, $710. The third stock is Sterling Infrastructure, ticker symbol STRL. Sterling Infrastructure is a behind-the-scenes AI play. While it's not a tech company, it benefits directly from data center construction, infrastructure expansion, and industrial development, all of which are required for AI growth to continue. AI models favor Sterling Infrastructure due to its strong project backlog and exposure to long-term infrastructure demand. The AI predicted price targets for Sterling Infrastructure are 1-year target, $435, 3-year target, $510. The fourth stock is Silicon Motion, ticker symbol SIMO. Silicon Motion operates in storage controllers, a critical component of AI, cloud computing, and data center infrastructure. As data generation increases, efficient storage becomes more valuable. AI forecasting models identify Silicon Motion as potentially undervalued relative to its long-term growth potential. This stock carries more risk than mega-cap tech, but also higher potential upside over a multi-year horizon. The AI predicted price targets for Silicon Motion are 1-year target, $145, 3-year target, $230. The fifth stock is Exxon Mobil, ticker symbol XOM. Energy stocks continue to show up in AI forecasts as long-term cash flow stabilizers. Exxon Mobil is favored by AI models due to its strong balance sheet, consistent free cash flow, and dividend-paying ability. This stock provides diversification, income, and inflation protection in a long-term portfolio. The AI predicted price targets for Exxon Mobil are 1-year target, $171, 3-year target, $210. The sixth and final stock is Service First Bancshares, ticker symbol SFBS. AI models often highlight well-run regional banks when valuations are compressed. Service First stands out due to disciplined lending practices, strong capital ratios, and long-term earnings normalization potential. This is a patience play, not a momentum stock. The AI predicted price targets for Service First Bancshares are 1-year target, $95, 3-year target, $140. When using AI predictions, it's important to remember that AI is a decision support tool, not a crystal ball. These models estimate probabilities based on data, not certainty. Smart investors combine AI insights with patience, diversification, and long-term thinking. To recap, every stock mentioned in this video is selected for long-term investors looking toward 2027, 2028, and beyond. The price targets discussed are generated using AI-driven forecasting models, not emotion or hype. If your goal is to build wealth slowly, consistently, and intelligently over time, this is the mindset that matters. Drop a comment with the stock you believe has the most long-term upside. And if you want monthly AI-based long-term stock breakdowns, make sure you're subscribed. Thanks for watching, and I'll see you in the next one.